So this is the Fed's balance sheet. Now, if you zoom into this, so first, if we zoom out, give you a long-term view of this, this is the Fed's balance sheet that we all know and recognize, right? And you can actually use the line with Marcus charts to see, of course, this is the, right here, the huge money printing in 2020 COVID crisis, right? This took the Fed's balance sheet all the way up here to nearly $9 trillion. It was 8.9 trillion. Now we've been, right, ever since 2022, the Fed has been doing quantitative tightening, bringing the balance sheet down here, all the way down to approximately 6.5 trillion. Well, now by zooming in to the Fed's balance sheet here and by, guys, selecting not only just the line with Marcus chart, which we can see a move here, it bouncing up, but you actually select the step line change. This reveals that in the last 3 weeks, you can see here, 1 step up, 2 step up, 3 step up, the Fed's balance sheet has been increasing again. This is bringing, this is money printing and bringing liquidity back into the market, guys, to the tune of nearly $100 billion so far. And this is just in the first 3 weeks. This is less than a month, guys, right? So today, Thursday, it's expected that the Fed's balance sheet is going to increase again, and therefore liquidity is rising in the market. Not only that, each step is now getting larger. So they started by buying around 24 billion, then I think it was 28 billion, and then last month it was something along the lines of 38 billion, if I'm not mistaken, but something like that approximately. But now this month it's going to be, it could, you know, next it could be even bigger. So that is a critical fundamental change in the market. This has sparked the start of bull markets in risk assets, right? Every time before when this happened. For example, the last time it happened in 2020, once the Fed's balance sheet started increasing, then over the next year or so, it took around 12 months for the next bull market to become activated. And slowly over that 12 months, risk assets turned bullish and started rising and going up. Slower at first, but then quickly. And so, you know, we have the dollar going up here, which is actually quite interesting. It's been maintaining this uptrend over the past few days, the dollar. As we can see, the US Treasury yields, including the 10-year yield here and the 30-year Treasury, are also slowly going up in lockstep at the same timing and rhythm with it, with the dollar here. And so interestingly, the US stock market indexes are all back up to their all-time highs, back up to the top of their ranges and their highs. So we have the S&P 500 just made a brand new all-time high right now, and the Dow Jones today also a new all-time high. The Nasdaq is close to its all-time high. The Russell 2000 is also close to its all-time high, and the US 30 Wall Street index has also made a new all-time high here, right? So 3 out of the 5 indexes now exploding to new all-time highs. That may explain a lot of the liquidity coming